Hi, welcome to Solution in YouTube channel. This will be first of the upcoming series of videos that will cover the basics of whole accounting cycle. In each video we will cover these concepts one by one. Let's have a brief introduction of each phase in accounting cycle. First phase is recording journal entries. When a business gets involved in a business transaction, it records it in general journal. It is also called the first book of accounts. Second phase is to record the transaction information into ledger accounts in more detail. Third phase is getting balances at the end of each reporting date. But at this stage there are several adjustments still to be made. Fourth phase is performing adjusting entries. This will correct any information that was not reflected in ledger accounts. Fifth phase is preparing adjusted trial balances after adjustments made in previous phase. Now the sixth and final step is to prepare financial statements from adjusted trial balance. Financial statements include balance sheet, income statement, cash flow statement, statement of changes in equity and notes. Let's discuss the first phase in detail. The journal entries. A journal is a detailed account that records all the financial transactions of a business, to be used for the future reconciling of accounts and the transfer of information to other official accounting records, such as the general ledger. A journal states the date of a transaction, which accounts were affected, and the amounts, usually in a double-entry bookkeeping method. Double-entry bookkeeping is the most common form of accounting. It directly affects the way journals are kept and how journal entries are recorded. Every business transaction is made up of an exchange between two accounts. Let us see an example. Assume a business buys inventory for $1,000 cash. The accountant will post the following journal entry. Notice that the transaction has a particular date that is written in the date column. Also notice that the entry mentions a debit and a credit account involved in the transaction. That are inventory and cash. Next is the description, that mentions the reason of recording this transaction. Finally, see these two columns. A journal entry is always in balance. Means debits are equal to credits. This brings up the concept of double entry bookkeeping. This means that each journal entry is recorded with two columns. In the above example, the business owner purchases $1,000 worth of inventory with cash. The bookkeeper records two transactions in a journal entry. The cash account decreases by $1,000, and the inventory account, which is a current asset, increases by $1,000. Typical information that is recorded in a journal includes sales, expenses, movements of cash, inventory, and debt. It is advised to record this information as it happens as opposed to later so that the information is recorded accurately without any guesswork at a later date. Now let's do some practice. We have detailed example here. On the 1st of April 2016, Alex started business with $100,000. The journal entry will be a debit to cash and a credit to owner's equity with $100,000. Next, on the 2nd of April, a purchase of furniture against cash will be recorded with the name of party as follows. Next, goods purchased partially for cash and on credit will be recorded in journal like this. The sale of goods will be recorded against cash and accounts receivable will be recorded with the name of party against credit sales. Next transaction is drawings that Alex made for personal use and decreased cash by giving a credit of $2,000. This is the beauty of recording everything. As you can recall the remaining amount payable and recoverable from parties. Alex still owed $500 to Master Retail Store and twin brothers still owed $10,000 to Alex. Both are recorded like this. Lastly, the salaries were paid and an expense was recorded against a decrease in cash of $2,000. Now look at the real solution of this example with the descriptions. See how everything is clearly mentioned in the journal. I hope we have covered journal entries in detail. We will cover ledger accounts in the next video. If you liked the video, hit the like button and don't forget to subscribe. See you in next video. Take care.